All right, let's do a market update. And it is the weekend, February 27th. And we got the high volume reversal day that I was mentioning that we will probably get in the last video I did. S&P 500, huge reversal day on Thursday. You can see that it gapped down. Everybody's worried about the invasion of Russia. We had a huge gap down, and by the end of the day, we had the reversal day on higher volume. Most of that volume came in with the panic selling in the morning hours. And then you see Friday, we had another up day. It went up again, another 2.2% on lower volume. So we may go up some more, maybe up to that downtrend line. No predictions. Everything I say here is I'm not predicting the market. I'm watching and reacting, but I'm expecting resistance. Right now the chart has to fight the 200-day moving average, the downtrend line, the 50-day moving average. All I'm doing now is watching and reacting. I'm watching the market rally up. I'm looking for signs to fade the rip, and what I'm looking for is for volume to dry up or a high volume sell off to let us know we're going back down. Like I said, a lot of the stocks, especially if you look at Cathie Wood stocks, were way oversold. Just repeatedly, stocks getting beaten down. We'll jump right to PayPal so I can show you. Look at PayPal. Look how oversold PayPal is. If I take you to this histogram, the bottom pane on this chart is how far the price is from the 200-day moving average. It's never been this oversold since the stock has traded. So just way oversold. So yeah, we've had a bounce. The stock also bounced back up. It had a big reversal day. We're talking about 4.3% on Thursday, another 5.6% on Friday. It could rally some more, but I mean, there's just a lot of overhead resistance on this stock. Before I turn bullish on this stock, I would have to see it rally up, decline on lower in volume, hold that low, Thursday's low, do a double bottom before I'm convinced that this thing's going up. Let's jump back to the S&P 500. I'll take you to my weekly indicator. Weekly indicator still remains on a sell signal. So we have a signal to stay in cash. Triple Qs is still sell signal still intact. Real estate sector, we still have the sell signal still intact. Let's go with the bond, the 20-year bond. Still sell signal still intact, and the commodity sector is the only one that's still in the green. So yeah, Thursday, Russia invaded Ukraine, and we just had this overreaction in stocks. We'll go to the triple Qs. Triple Qs also had that huge reversal day on Sunday, that huge gap down. I always say when a stock gaps, either up or down, it's too late. Don't jump into it. The move's already too late. And you can see, same thing. The triple Qs gapped down on Thursday, and we had a reversal day. The volume wasn't as high as that January 24th day, but it was enough for it to mark a reversal day. Friday went up a little bit more on lower volume, and again, you see I adjusted my trend line. A lot of resistance in this index right now. It needs to break the downtrend line, needs to break through the 250-day moving average. So we'll just watch it. We'll see how far this rally can go. Again, the Ukraine-Russia war is it's accelerating the trend. But the overall theme of inflation is impacting the market. That was the reason why things were breaking down. That is still in place. Nothing has changed. The Federal Reserve hasn't come out and, I mean, they're already at 0%. What are they going to do? What are they going to do? Say, hey, anybody who has their money at the bank, we're going to charge you 1% to have your money in the bank? If they come out and say that, then yeah, people are going to run out, take their money out of the bank and do something with it, throw it in the market. If they come out and say that, well, if Congress comes out and says, hey, you know how we gave, a $1,200 stimulus? We're sending out another stimulus, $12,000 for every person. All right, things are changing. The make-believe rally is going to continue. But at this moment, I haven't heard anything. The Federal Reserve hasn't come out. They're meeting in mid-March. We'll see what they're going to say. I think they're still going to raise, they have to raise interest rates. With this war and the pressure on energy, they may only raise 0.25% now. I think the market started rallying because everybody was pricing in that the Fed was going to raise 0.5%, and possibly 0.75%. But with the war, with the Russian invasion of Ukraine, now people are saying, oh, they're only going to raise 0.25% because they can't raise too much, because we're already going to have upward pressure on energy prices. So from the chart, you can still tell. Well, obviously, my long-term signal was still on cash. Looking at it, even the daily chart, the triple Q still has a lot of resistance to go through. I think we're going to still head down, but you never know. Just watch it and react. And I didn't get any sell signals. My long-term portfolio is still in commodities. Even though you see on this daily chart, you can see we had a sell-off, but I still didn't get any sell signals this week. All of my positions, I have 0 sell signals. I mean, I can cycle through this, but I don't have any red bars on my chart, so I don't have any sell signals. Switch to the daily. In fact, even some of the chemical stocks that I bought, agricultural chemicals, the fertilizers, Nutrient here, Mosaic, they actually broke out to new highs on Friday. Solar stocks are breaking out. My mistake. I meant to say shipping. Shipping stocks are breaking out. General Mills sold off, but bounced back on Friday. All of these stocks, I think this is listed. The stocks on this list is listed from the last ones I added. That's why it's not in alphabetical order. So the last stocks on this list I just added this week. So we have a gold mining stock. I like the stock here on the Altria Group. It's a tobacco stock. Tobacco stocks have been breaking out. Tobacco's kind of acting like commodity stock. I think people who are addicted to tobacco are gonna keep smoking. It's kind of like a food. They're gonna keep going. They're gonna keep buying that product. Here's another shipper breaking out. Energy. So my whole portfolio is energy, Archer Daniels, Conagra Foods I ended up buying. My whole portfolio right now, OBV right here breaking out to a new high. The price hasn't broke out to a new high, but you can see OBV making a new high. This is a steel stock. But all my stocks right here, another OBV making new high here. This is a natural gas index fund. But all my stocks, my long-term portfolio is right now positioned commodity-based, food, defensive. Defensive meaning, defensive stocks like the safe stocks, consumer, non-durables like food companies. When I say defensive, I don't mean the defensive contractors. So I did want to show you. So let's take a look at it. So I just bought Altria this week. Let me show you something interesting in this sector. Let's go to the tobacco. So I own this stock. Scroll the chart back for probably when I bought it. I think I bought it when this is what I was looking at when I bought the stock. I seen OBV breaking out, and I decided to jump in the stock. But what you're seeing is, look at Philip Morris. It's had a drop, but you can see that OBV was at a high when I bought that. And same thing with British American Tobacco. So these tobacco stocks have been breaking out, and seeing how fast they went up, this pullback is normal. Even with my long-term portfolio that is pretty much all commodity based, if we look at some of the commodity based stocks I'm in, like let's take this one that invests in agriculture. The same way the market had that huge reversal day, the commodity stocks reacted the same way with the news of the war. You can see this huge gap up. Look at the volume that came in. Huge volume came in, and it ended up selling off by the end of the day. So I wouldn't be surprised if we pull back to the 50-day moving average, the 200-day moving average. But as far as these commodity stocks are concerned, to me, I'd be buying the dip. I'd be buying the dip until I get a sell signal. Same thing with this general commodity fund that gapped up. Usually gaps are not worth buying. I look at the video, I forget what I titled it. I think I said gap was not worth entry. But look, it gapped up, huge volume came in, sell off. So the commodity stocks kind of reacted the same way the S&P 500, the triple Qs reacted. The stock market gapped down and they ended up rallying by the end of the day. The commodities gapped up and they ended up dropping by the end of the day. Even gold, let me take you to the gold. Even gold and silver had the same reaction to the, look at that huge gap up. Look at that, it basically gapped up in the morning. Everybody panicked. They wanted to be in something safe. Gold has a history of being a safe haven asset. Everybody jumped into gold, bought it right at the open, and look what happened. It came all the way back down. But again, it's still, we'll see what happens. I'm in it, and I have no sell signal. It's in my long-term portfolio. We will hold it until I get a sell signal on this one. I'm going to be doing a video on, I'll do another video eventually, sometime next week. I'm going to do a video on gold and silver. But that's basically it. And then same thing with the short positions. A lot of the shorts rallied. A lot of my short positions have had huge bounces up. Tesla, huge. They're all going to be the same. They all gapped down on Thursday and ended up rallying up on significant volume. They're all the same. Roku, I ended up short and I ended up doubling my position in Roku. So I did short Roku again on Friday. They're all got the same pattern. They all had this huge reversal day. So Etsy, I'm short. It blew right past my stop. And I didn't have a physical stop in place. I'm holding it for now. But if it goes any higher, I'm going to have to get out of this position. And I almost shorted more of it on Friday. I had my finger on the trigger and I just couldn't, I just wanted to, I didn't take the risk. And I said, you know what, let me not, I have a sell signal and let me not fight it in case the market rallies more. Because we can get a rally. There's still room for this thing to rally all the way up to the 200-day moving average before it reaches resistance. And look at the volume that came in. Huge volume. But it was on earnings. And between this one, Etsy, and Square, bounced up 26%. Look at the volume that came in. It could be short. It could be a short covering, like people like me that were short, that had physical stop orders in place, maybe getting filled. Or I can't imagine people rushing in to buy this for a long-term buy. But anything's possible, but these two positions, I almost shorted. I almost added to the position, like doubled down on my bet. I just couldn't get myself to pull the trigger. So if it goes any higher, I'm gonna have to get out of these two positions for a loss because I didn't have stop orders in place, and they blew right past the stop. At that point, I'm like, whatever. I'll just wait to see what happens. So we'll hold these a couple days, and we'll see what happens. But other than that, I show you my short positions. They're all pretty much the same. Oversold bounces. Again, I'm looking to fade the rip. Google's the 50 days about to cross over the 200-day moving average. But again, we'll see what happens. It's going to be volatile, especially with all the conflict that's going on with Russia and Ukraine. The market is going to be pretty volatile this week. And we still have all the problems that China's going through right now. So there's a lot of headwinds in the market. Like, everybody's attention right now is on Russia and Ukraine, but there are property developers in China that cannot repay their bonds. So I know Evergrande, they had like $300 million in bond payments coming up that they're not going to be able to repay. I don't know the exact date, but they're not going to be able to repay their bonds. And then there's Country Gardens, and there's other developers. It's not just one company. The Chinese central bank has already cut interest rates. So they know something's wrong over there when they're cutting interest rates. Inflation's out of control. Everybody's talking about raising interest rates, and China's cutting interest rates. So why are they cutting interest rates? They must know something. They must know that there's a systemic risk in the system. Nobody's looking at that. All this that's happening with Russia, in Ukraine, what do you think's going through China's mind right now? You don't think they're eyeing the developments of what's happening? All it takes is for China to decide to go into Taiwan and try to take over Taiwan. They've been talking about taking over Taiwan for the past year or two, and the United States has been trying to stop it. But now that the United States is kind of distracted with Russia and Ukraine, what's stopping China from saying now's the perfect time? The Winter Olympics are over. United States the West have their hands full right now trying to stop Russia. Now's the perfect time to go into Taiwan. If they decide to do that, how's the market going to react? Another, surprise news to the market. I don't know if they're going to do that or not, but I mean, think about it. It'd be the perfect time right now for China to go into Taiwan. So we'll see what happens next week. It's going to be volatile, and just know your exit strategies on your positions, and you're just going to have to follow through. Like this one right here, I'm short Intuitive Surgical. The chart price, the stock's actually looking pretty good. It looks like it's bouncing up, looking good as far as it may go up, which is bad for me in this scenario. But and if it breaks out of this range here, what's the high right here? If it goes any higher than 295.26, I'm gonna have to get out of this position, because you had this huge bounce, the January 24th reversal. We had another decline, and then I even made it down there to retest it. We already had higher volume reversal on Thursday. The stock may go higher, so I'm gonna have to get out of this position if it breaks higher. So just know your exit strategies. If you're trading, know what you're doing. Know what you're doing before you get into the trade, and that's pretty much it. Just an update. We'll go back to the triple Qs. Just an update of what's happening. We had the high volume reversal day that I was anticipating. Long term, I think we're still going down. I mean, the S&P 500 is down 8%. That's nothing. Let's jump to the S&P 500. S&P 500 is down 8% from the top. A 10, 20%. A 10% decline is a correction, which happens all the time. Like 10%, just because we haven't experienced a 10% decline in the last year. I think the biggest decline we had was 5%. That's not normal. 10% declines. Look at 2018. I think this was, I don't know the exact numbers, but I think this was a 15%. The pandemic crash was a 30%. So a 10% correction is normal. 20%, 10 to 20%, it's not uncommon. So I think we still have a long ways to go. And if we're in a bear market, forget it. We're going to go even lower. So I keep saying it. I think the tide has changed. I think we're in a bear market. But you have to look at the chart and react to the chart. Like I said, I didn't have any sell signals on my long-term portfolio. I did have to sell 2 stocks. Let me go to my list of sold positions. Yeah, so I had to sell at the beginning of the week. I had to sell AutoZone. I had to dump AutoZone out of my portfolio. I had a red bar last week, so I sold it at the beginning of the week. And same thing with Celanese, which is a chemical company. And I'm actually bullish on this sector, but I got a sell signal, so I had to get out of it. So those two stocks I had to sell on Monday. Um, but even if I'm bullish on a sector, you still have to pay attention to the chart. So here's another chart I'm going to show you that even though I'm bullish on agriculture right now, and logically you would think manufacturers of agricultural equipment would be going up. You got to pay attention. The chart is what tells you, confirms your theme. So we're looking at Caterpillar right now. Even though I'm bullish on this sector, this thing topped out in June. OBV is not giving me any signal that it's ready to turn up. It's actually breaking down. It broke the low, broke a new low here on Wednesday. It may bounce back up, but there's a lot of resistance on Caterpillar right now. Same thing with Deere. You have this yellow line here. How many times did it hit this line and it hasn't been able to break through? So even though you come up with a theme, like a commodities is going to be bullish theme, you still have to pay attention to the chart. The chart's not confirming a theme that you have in mind. You have to pay attention to the chart. So if I have a chemical company, even though I'm bullish on that sector, and it gives me a sell signal, you have to follow your exit strategy and get out of it. Maybe something's changing that you don't know about. You'll find out about it, a month from now. Oh, they had problems, or profit margins got squeezed because of the inputs to make the fertilizers change. Whatever it is, you have to follow the chart. If you're trading off charts, you have to follow the chart. I'm going to leave it at that. The video's already getting long here. I'm going to leave it at that, and until the next market update.